Don't think about anybody but Rob Stern.
Here we go.
We've got what we call the Holy Ghost hookup here on Heaven 97. We're doing kingdom business. And we want to get you into a house, get out of those apartments, get out of those rent houses, get that credit of yours straight, particularly our young millennials out there. We want you to go ahead and get started. And first of all, a good Friday to you, Rob. How's it going? How's it going, Rob Stern?
Things are very well today, Robert. Thank you so much for your introduction, and I do have the hookup, so I really appreciate that, and I hope things are well for you as well, Robert.
I tell you what, we're moving on, Rob, and we've got to get some folks in some homes here because it seems like the economy. We're looking at the economy. The stock market, Rob, has been somewhat stable this week. You know, after we had to shut down during COVID-19, there's so much controversy going on about this shutdown. I just wish the American people knew the things that we in the media know, but sometimes it's classified. That's neither here nor there. But Rob, what's your assessment of the American economy, and are we coming back? Those who want a home, we want them to stay hopeful.
Yeah, Robert, you know, let's talk about that for a second, because that's actually a real significant part of what's happening right now. And of course, owning a home, purchasing a home is quite literally the American dream. It's something that most Americans clearly aspire to in their lifetime, and most Americans have the capacity. The economy right now is actually stabilizing significantly, as you alluded to a moment ago. Stock market is doing better. We are not seeing the significant gyrations that we were seeing perhaps 6 weeks or so ago. The economy is starting to open back up, and I heard a report this morning actually that the numbers in Dallas, the COVID-19 numbers as far as fatalities, has dropped significantly, and that's obviously encouraging. You know, I feel like we've all been through a very it's been a very traumatic time for all of us. I mean, we've all suffered with this shelter in place, and of course, I know several people who are still adhering to that advice, even though we've been told that it's safe to go back in the water, for lack of a term. You know, there's still a lot of apprehension, a lot of concern, a lot of questions, but in the scheme of things, Robert, I believe that we all are going to need some place to rest, some place to lay our head on a pillow. We are all going to ultimately pay rent of some form or fashion, whether it's to an apartment complex or to a homeowner that we're renting from. There's no reason not to own your own home, and home ownership has so many really positive attributes. Not only the tax benefits of home ownership, but most importantly, the fact that you are owning something and building equity for later on in life, whereas renting an apartment or a home, for that matter, provides you with no asset whatsoever, nothing to call your own. There is no opportunity to build that equity for later on in life.
Mm-hmm. Well, that's something that we certainly want to encourage our young millennials to get a head start on buying yourself a home. The phone lines are open. If you have a question or a comment for Rob, you've been thinking about it, you just say, oh, I don't know whether I should do it now. I want to wait to see if the economy is going to really stabilize. I got to see who's going to win the next election. That's coming up. 972-996-3970. That's our number. Once again, talking here about the American dream of home ownership. Do you qualify to get yourself a home? 972-996-3970. That's our number. And Rob, what's going on with the interest rates right now?
Yeah, Robert. Interest rates are very attractive right now, Robert. We are seeing 30-year interest rates in the threes, mid threes, 15-year rates in the low threes, and perhaps even the high 2% range. Rates are just ridiculously cheap right now, and you know, I feel like something for all of our listeners to understand is that you can make money a couple of different ways when it comes to home ownership. You can certainly buy your home and earn equity in that home over the years and have a significant amount of profit left in that home. You can also earn money, though, by refinancing your home if you've already owned a home. If you own a home right now and there is equity, there is perhaps an opportunity for you to take that equity out and use that to your advantage, whether it's a matter of eliminating high interest credit card bills or paying off an automobile or just having money to invest. There's a lot of people right now that are doing just that. As a matter of fact, I had a young lady call me just yesterday that is going to be paying off her rental house with the equity that she has in her primary residence. So she literally will be left with only one house note after we refinance her, but she has that much equity in her primary residence. There's just so many ways to make money when you actually are in the real estate market. Whether it's a matter of being a homeowner, buying a new home, refinancing your current home, taking equity out of that house. Really, we want to reach out to all of our listeners, all of our viewers, certainly on Facebook, that are current homeowners or contemplating home ownership. Now is the right time to do a financial checkup, and we started speaking about this last week. Just give me a call. Let me look at your credit. Let's look at your income situation and see what you can actually afford to. What you can afford to do moving forward, because there's a lot of options. My telephone number is 972-739-2350. That's 972-739-2350. As I said earlier, you can find us on Facebook as Lenders Residential Mortgage Team. Go ahead and like us on Facebook, please. And you can reach out on the internet at lendersresidentialmortgage.com or Lenders Texas, LendersTexas.com, and give us an opportunity to help you save some money.
Yes, and Rob, in terms of the values of our homes, in light of the fact a lot of people have been getting those property tax bills, if you will. Some people have been protesting those property tax bills. The value of our homes, are they going up too fast here in Dallas-Fort Worth, or is it just the market? Because I talked to somebody the other day, and he said that he felt like his property taxes have almost doubled.
Well, I mean, they may have, and they clearly shouldn't have. And it's our responsibility as homeowners to manage our property taxes, just like we would manage our bank accounts or our credit cards or anything else. And when I say manage, property taxes are not assessed directly based on the actual property. Rather, they're assessed on the general area where you live. Now, your house may be perhaps in disrepair, or there may be a reason for them to reduce those property taxes, which you can argue as long as you're cognizant of that fact and you literally reach out to the municipality and schedule that protest. And it's really not hard. I know you're a homeowner, Robert. You get something in the mail telling you what your proposed property taxes are and giving you the capacity to protest them. And a lot of people protest their property taxes. There are services out there that will do it for you for a fee, but you can protest those taxes on your own simply by taking a canvass of the neighborhood, what other people are paying in property taxes based on the size of their home and the condition of their home, and then applying that to your personal house. I know a lot of people who have those taxes reduced and have had a significant amount of success doing that year after year. So again, it's just about management. Why don't we talk for a moment about what property taxes represent? Because I think that's probably very important for our listeners. When you pay property taxes, you're paying property taxes for several things. Your property taxes go for your water and your sewage. Your property taxes go for your schools and the education. You're paying property taxes for your ownership of the actual land that your home sits on, as well as for the home and the value of the overall property. So higher property taxes typically would be indicative of the fact that your home is escalating in worth, in value, but not always. Oftentimes those property taxes could be in fact out of line. And if they're too high, again, all you need to do is schedule an appointment with the municipality where you own your home and dispute those taxes and go in for a review. It's entirely possible you can get some relief.
Yes, indeed. And like you said, those taxes go for a lot of things. Our school districts, well, I think also hospitals.
Yes, sir. No, you're correct. Hospital district as well, and a lot of actually certainly in Dallas County, you're going to see taxes for Parkland, which is your hospital district. A lot of these hospitals that issue free care to indigent people who can't afford to pay, a lot of that money comes from the taxes that are collected through our property taxes. I guess in Tarrant County that would be JPS is the hospital over there that does a lot of the indigent work and charity work. Again, we are supporting our society with these property taxes, and we live in a great area, a great place. Fort Worth, Dallas is literally unparalleled in so many ways when it comes to home ownership. So, unfortunately, taxes are an expense we have to address, but not an expense that cannot be dealt with, and it's typically paid as part of your mortgage.
Yes, indeed. Well, once again, if you have a question or a comment, our phone lines are open, 972-996-3970. That's 972-996-3970. That's our number to call, talking here with Rob Stern about Lenders Residential Mortgage. We're trying to get you into a home. And Rob, as a result of COVID-19, many of our cities are really suffering because a lot of things that would stimulate our tax base, such as concerts and all that kind of thing there, hotels having conventions, a lot of that has just gone by the wayside. And just this week, the Dallas City Council, somebody proposed an 8% property tax increase. Now, they rejected that and decided to move forward with a 3% property tax increase. So do you think that we homeowners are going to have to bear the brunt of this economic downturn as a result of COVID-19?
Well, I feel that no. I think that property taxes increase often, so that's not really fair to extrapolate from the remark. I believe that that property taxes are going to continue to increase, just as property values hopefully will increase. I know back in 2008, 2009, 2010, when Governor Perry was in office, they actually reduced the property taxes because of what we were going through from an economic perspective. I think that the other thing to consider, and this is also important, that is that we can deduct our property taxes off on our income tax at the end of the year up to $10,000 per household. So most people, certainly anybody living in a house with an appraised value that is less than $300,000, is going to be able to realize a tax benefit off of paying those taxes annually regardless. So a 3% tax increase, and again, this is pretty interesting. These are all, it's all a mathematical equation, but again, a 3% increase in property taxes when your property taxes may be $3,000, 3% of that would be $90. So we're not looking at huge numbers here. The reality is that clearly we have to pay for all of these public services that we enjoy, our police, our fire, our water, our drainage, our garbage and trash pickup, all of the other things that we may take for granted. Those are all city expenses and expenses that need to be addressed.
Yes, indeed. Well, Rob, let's give out that contact information again, sir.
Okay. My telephone number is going to be 972-739-2350. Again, that's 972-739-2350. And you can also reach me via the internet. Just go to Lenders Texas. That is LendersTexas.com. Or find us on Facebook, where we're actually live right now. That's Lenders Residential Mortgage Team.
Like that. Now, Rob, also in terms of for our first-time home buyers, I know that the state of Texas at one time had a program. What has happened to those programs that would help pay your closing costs, maybe even a little bit of down payment? Have they gone away? Do we still have those, or?
Yeah, they have not gone away indefinitely, Robert, but they have certainly morphed or changed into something very different, just given the current volatility of our economy. Right now, there are still no money down opportunities available. Obviously, USDA and certainly the VA loan, which is a no money down loan, has not changed at all. But the state of Texas product that we were using for a long time, and will use again at some point, has changed their minimum criteria and their minimum credit scores, and because of the volatility right now, we are not working with that specific program. Now that doesn't mean that we won't come back in the market with it. I'm sure we will, but right now there's just way too much risk. So the down payment assistance programs, as you know it or as we know it, are on hold temporarily. Now with that being said, we're still taking a lot of people in and going ahead and getting them set up for their mortgage loans, so that when the program is back and in effect, they can slip right into it without a problem, without a difficulty.
Beautiful, beautiful. And Rob, in terms of qualifying for a home in this day and time, in light of COVID-19, what's going on with our market? Is it easier? Is it more difficult to qualify? Just talk to us, Rob, about qualifying to buy a home.
Sure. Well, so there are some basic parameters to qualifying for a mortgage loan that we're always going to be looking at. Now, with the pandemic, with COVID-19, and the problems that we're all facing, clearly there is a little bit of wiggle room there, and because of that, we've had to adapt. But traditionally, what we are after is going to be 1 month's worth of paycheck stubs, the last 2 years of W-2s or tax returns in addition to that, as well as the 2 most recent bank statements. That information, coupled with a consumer's credit report, will pretty much give us everything we need to know about how to qualify them for a mortgage loan and what to do moving forward. Now, clearly there's been a lot of people that are furloughed. I have several people that have been furloughed over the past couple of months, and with that furlough, quite literally, what's going to end up happening is we are going to look at literally a stopping point and a starting point when they're back at work. I had some individuals that worked at General Motors and they were furloughed for 2.5 months, but now they're back at work earning their traditional income. That's what we're going to use as their actual traditional income, with supporting documentation to document the fact that they were actually on furlough, and that's why there is a gap, so to speak, in income. Same thing with other people, waiters that work at restaurants, maybe flight attendants. There's been a lot of people that have been out on furlough, but that doesn't mean you cannot buy a home. It just means that we have to go through a bit of a different documentation process to get you there. And again, as always, Robert, and we say this week after week, the main thing is to start the process. You have to begin the process somewhere in order to end, in order to have a finishing point. It's all about the action plan that we would create, and clearly the goal is for all of our listeners to reach out as soon as possible and give us that opportunity. My telephone number again is 972-739-2350. That is 972-739-2350. And you can also find me via the internet. Just go to Lenders Texas, spelled out LendersTexas.com.
Right. Once again, we're talking here with Rob Stern of Lenders Residential Mortgage. And man, he's got so many Habit 97 Creighton listeners, homeowners have gotten you into a home, and that's exactly what I want him to help you do. So once again, we're going to pause for just a quick break, and we'll be back with more from Rob right after this.
All right. So while we're on break, let's talk for a moment about exactly what's going on and kind of how we are seeing the market react to what's transpiring, because this is a real interesting time. It's actually a historical time. You are living history right now. It doesn't matter whether you're 18 years old or 80 years old. This is history. This is something that's never happened before, and I pray it will never happen again, certainly in our lifetimes. There's a lot of speculation about what's going to happen, and a lot of conversation about what's going to happen. A lot of your large banks, certainly Wells Fargo and Bank of America and Chase, are raising their credit score requirements. A lot of the home builders out there are raising their credit score requirements for individuals, and because of that, they are not able to get into loans that they were promised previously. I get calls almost on a daily basis from people who have been pushed out of a mortgage loan because they were told they'd no longer qualify. And I want to be real clear about this. That is a sign of the time, so to speak, and I'm sure you're familiar with that expression. That is an artificial overlay. It is not something that is an overlay that is from FHA or HUD. It's not an overlay from the Veterans Administration. They did not just automatically raise their interest rates. Rather, this is a situation where your big banks and some of these other lenders are putting artificial, and I say artificial in quotation marks, they're putting artificial risk-based overlays in place specifically because the goal is to protect their portfolio and mitigate risk. That's not the way it should be, and it's not the way that the Veterans Administration or HUD has required it to happen. But there's a lot of misinformation about this out there right now. I am a direct lender and a direct representative of FHA and HUD, Fannie Mae, Freddie Mac, USDA. As such, what we are all about is working without risk-based overlays. There's literally nothing that has changed, and because of that fact, it's very important that you understand when we are in fact building a mortgage loan. Literally, nothing is different than it was. VA mortgage loans, regardless of the credit score criteria.
Residential mortgage. And once again,
Hang
I
on,
want you to become
we're back.
a homeowner. I want you to move out of those apartments, get out of that rent house, get your credit straight. That way you can become bankable and get a piece of the rock, which of course is a part of the United States of America, and then let your children live in that house and inherit that house, and they can go ahead and do whatever they want to do. And also for the millennials, if you get started early, that home that you buy in your 20s, by the time you get into your 40s, maybe even your 30s, the value could possibly have doubled. But once again, Rob Stern is with us of Lenders Residential Mortgage Solutions. And Rob, let's get off the contact information. I just want to keep giving that out because somebody's going to write that down and eventually call you, Rob.
Thank you, Robert. My telephone number again is 972-739-2350. That is 972-739-2350. You can also contact me via the internet. Just go to Lenders Texas. That is LendersTexas.com. All
right. Now, Rob, in terms of let's see here. I was trying to make sure. Let's see. Okay, the veterans. Are our veterans really taking advantage of the advantages that they have of getting themselves a home? Are you seeing any more veterans? What can you say to our veterans?
Yeah, Robert. I'm speaking to more and more veterans on a daily basis. No, our veterans don't really take advantage of the opportunity that they've been given as a veteran for the sacrifices that they have made for our country. We're not seeing enough veterans as homeowners, and we clearly want to continue to increase those numbers. You know, a VA loan literally has no minimum credit score, and I want to emphasize that no minimum credit score remark. There is no minimum credit score required for a veteran when they go to buy a home. A VA loan is going to be judged entirely by the way the veteran has controlled or been responsible for their credit over the past 12 months. Literally, it's that simple. A VA loan is going to be based off of income qualifications and how they've paid their bills over the past 12 months. The VA loan is probably one of the most misunderstood loans out there in the market. You know, we were talking during the break. We were talking about risk-based overlays and a lot of the minimum credit score criteria that we hear people speak of. Well, VA is a great example. The VA loan, the Veterans Administration has no minimum credit score that they place on a mortgage loan. Rather, they expect us as a lender to qualify people based off of how they've handled their debt load over the past 12 months. More importantly, the Veterans Administration has a maximum debt-to-income ratio of 65%. What that means is that when you hear Bank of America or Chase or Wells Fargo issue these criteria that say you need to have a 660 credit score and you can't exceed a 50% debt ratio, those are risk-based overlays. They are artificial. Those are overlays that are put in place by the specific bank, by the specific lender for the purpose of mitigating their risk. It's not what VA is willing to guarantee. From our perspective as a direct lender, if the VA will guarantee that loan regardless of credit score, that I'm not going to make the veterans suffer because their credit score is under 620. That's not a concern for me. Because the VA will guarantee it to 65% on the back end as far as ratios, I'm not going to stop someone at 50% to try and mitigate risk. I'll underwrite the file all the way to a 65% back end DTI ratio. DTI meaning debt to income. But the point is, veterans have the capacity to buy more of a house than anybody else because of this. Veterans have the capacity to be homeowners regardless of their credit score because of these criterias. And again, not enough veterans are taking advantage of the opportunities, and we clearly want to reach out and speak to all of our veterans, invite them to call so we can create an action plan to move forward. There's no reason why a veteran is not a homeowner.
Yeah, and Rob, it seems like you've got a little bit more flexibility in that debt-to-income ratio because, some lenders are real tight. They wouldn't even think about going over 65%.
No, you're absolutely correct, and that's the whole point. We're a very flexible, makes sense mortgage lender. We are a direct lender and a mortgage banker, and that gives us a lot more capacity and a lot more opportunity. And therefore, I do a lot of VA loans. I work with a lot of veterans, but I clearly would like to see more veterans take advantage of the opportunities that they've been given to become a homeowner.
Amen. Well, once again, we're talking here with Rob Stern of Linders Residential Mortgage and Mortgage Solutions. Got a few more minutes to go here with Rob, so if you have a question or a comment, the lines are open. 972-996-3970. That's our number. And Rob, just a word of hope. I've been talking to some college graduates here. This is a special, interesting year for our college graduates. 2020. Just some strange things have been going on here. Now, our college graduates with student loan debt, what impact does that have on them qualifying for a home?
Well, student loan debt is going to play a part in qualifying for a mortgage loan. There's no doubt about that. Now, interestingly enough, the FHA has one set of criteria for judging student loan debt. Fannie Mae and Freddie Mac, which is a conventional loan, has another set of criteria for judging student loan debt. And the VA has yet another criteria for student loan debt. With the VA probably being the most lenient when it comes to student loan debt. This student loan debt, in my opinion, is obviously way out of hand. We're seeing way too much debt out there for student loans, and these young people are taking on way too much of a burden. With that being said, we are going to look at the amount of debt that they have accumulated, and that will enter into their debt ratios, which is another reason why we typically see these higher debt ratios are very useful in closing mortgage loans. As a parent with a child who's gone through college and used student loans to finance it, I can tell you that it's not only a potential hindrance, but more importantly, I can tell you that when it comes to repaying these debts, the one thing you do not want to do is fall delinquent. Anytime you are looking for a loan through a government facility, and that would be Fannie Mae, certainly Fannie Mae, Freddie Mac, the Veterans Administration, FHA, and the Department of HUD, USDA, they're going to look at delinquent student loans as a problem. So if you have student loans right now, maybe you've been out of school for a while, but you've let those student loans go delinquent. The one thing you don't want to do is keep them delinquent. Work out a repayment plan, some sort of a workout to get your student loans back in good standing, a rehabilitation plan, because that will preclude you from home ownership, regardless of how much you owe on those student loans.
And Rob, also now, does that same principle apply to, take for example, credit card debt and medical debts that you may accrue if you get sick or have to go to the hospital?
Sure, good questions. Medical debt, we'll start there. I will never hold medical debt against a consumer. So when you have medical debt, whether it's for $1,000 or $1 million, I'm not going to ever ask a borrower to pay that debt back. Ever. ever. Medical debt will never be a requisite of repayment. However, it can impact the credit scores. Credit card debt typically isn't a problem. If we have delinquent credit card debt, we certainly need to address that. And when I say we need to address that, delinquent past due credit card debt can be a problem. It's really something that we're going to need to take on a case by case basis. We're going to have to just look and see exactly what it is that's happening. But clearly, letting a credit card go delinquent is never a good idea. Past due credit cards, past due installment debts are always a potential problem. Student loan debt, same principle. I think what we want our listeners to take away from everything, Robert, is the fact that if you're struggling with your debt, and that happens from time to time, if you're struggling with your debt, reach out to your creditor. Reach out to your mortgage company if you're falling behind on your mortgage. Reach out to the credit card company or to the student loan company. Let them know exactly what's going on, and there's no reason why they won't help you through the process. But if you wait until things are to the point of charged off, until they're collections, then you can certainly find yourself in an uncomfortable situation, and there's really no reason for that. We want to be proactive instead of reactive.
Yes, indeed. Yes, indeed. And Rob, before we go off, just a word for those who may want to move outside of the city, out into the rural area. Do you still have that USDA financing?
Yes, sir. We're still doing USDA loans. Our USDA loans actually go as low as a 580 credit score. Now, the one thing we want our listeners to understand, and this is very, very important, outside of the city is taking on a totally new meaning. Our city is growing so fast, Robert. Every year the USDA guidelines are literally redrawn. The USDA, which is the United States Department of Agriculture, is offering up this type of a mortgage loan for the purpose of populating or repopulating these underserved areas. As we continue to grow in the Dallas-Fort Worth area and surrounding areas, these lines are constantly being redrawn. The USDA loan is a great loan, and seriously, we see more and more people that are opting to move outwards, mainly because they can work from home now. That's one thing the coronavirus has taught us all, that we can work remotely and still be as productive, if not more productive.
Yes, indeed. Well, Rob, I've been asking all the questions here. We've got a few more minutes to go. Can you think of anything else going on to the market we might need to know about?
Well, yeah, I can actually. I've got a couple of questions that have come in over Facebook that we probably should address. Filing unemployment.
Great.
Will filing unemployment actually affect a closing of a mortgage loan? And yes, not having a job will in fact impact your capacity to close a mortgage loan. So if you've been approved for a mortgage loan right now and your goal is to close on a home, in other words, you've already been approved for that loan, and maybe you're in the process of working towards closing that mortgage loan, you want to let your mortgage company know immediately if you've gone on unemployment, because that will have a potential effect on identifying your debt to income ratios. It may not hurt significantly, but certainly the lender needs to know exactly what it is that's going on. Once you are a homeowner, going on unemployment will have no impact on your mortgage loan directly. Although if you're struggling to make those payments, you certainly want to reach out to your current lender and let your lender know what's going on. Something else that's real interesting, and we've been spending a lot of time speaking about veterans. If you have a loan right now and you are a veteran and you want to refinance to a lower interest rate, take advantage of these opportunities, 3.25%, 3.5%. You can refinance your home without an appraisal and without income documentation. The VA offers a mortgage loan called a VA IRRRL, and I'm seeing more and more veterans come forward and getting themselves out of these 5.5%, 6% interest rate loans refinancing into a much lower rate without even having to document income or get an appraisal on the house whatsoever. And VA offers a similar program as well. So there's a lot of opportunities out there. If you're struggling to make your mortgage payments because of a high interest rate, this is the right time to give us a call and talk through the opportunities. There very well may be a solution without you having to miss payments and go delinquent.
Beautiful. Rob, what's that hookup? What's the contact number there, sir?
Thank you, Robert. My telephone number, once again, is 972-739-2350. That's 972-739-2350. And you can also reach me via the internet. Just go to Lenders Texas. That is LendersTexas.com.
All right. Well, Rob, will you say hello to that Facebook audience there that you've built up? I've been watching you on Facebook there, Rob.
Thank you, Robert.
It looks like you got a face for television, Rob, or something like that.
Or something like that.
Well, look, we want to thank you, Rob, and we'll look forward to talking to you next Friday right here on Heaven 97. Have yourself a safe and good weekend, Rob.
Thank you so much, Robert. God bless you. Have a good weekend.
God bless you.
Take care, buddy.
Take care.
Bye-bye.
All right, that's Rob Stern.
All right. So in closing, let's kind of bring this to a head. It's always a blessing to speak with and visit with each and every one of you. I am a direct mortgage lender, as I said earlier. The name of my company is Lenders Residential Mortgage Team with Mortgage Solutions. We do a lot of really neat stuff like VA mortgage loans, regardless of the credit score. 65% debt to income ratios on VA loans, 57% debt ratios on FHA loans down to a 500 credit score. So please just give me a call. I'm going to sign off here because I got to take my dog out for a walk. She's whining in the background. But my telephone number, once again, is 972-739-2350. Again, that's 972-739-2350. You can find me on the internet. Go to Lenders Texas, LendersTexas.com, and I appreciate you. Thank you so much, and you have a blessed day. Come on.